Good afternoon, welcome to GrainTV. It's August 9th, 2013. I'm Logan Burgess. To my right here is Cody Bills for the weekly wrap-up here on GrainTV. Let's jump into Fire Tips, see how the grains closed out the week here in Chicago. As you can see, a lot of red on the board as it pertains to the grain market. Off 7 3/4 for old crop corn. New crop corn down 6 1/2. We had old crop beans down 9 1/4. New crop beans hanging in there with respect to the old crop, down just 2 cents. And looking at wheat here, a relatively weak but kind of quiet day there, down 7 3/4 in Chicago, off 4 3/4 in Kansas City. You know, Cody, I know you and I yesterday on GrainTV were talking about a little bit of that strength out of the soybean market. Certainly didn't see that in beans today. Didn't see that in corn. What's kind of your takeaway from action here one day before that WASDE report?
We did actually see a little bit of continuation in the overnight session, but once we got a little bit more volume throughout the day, we started coming off here. We did hit some resistance right up around 1241, and I think you know, there's a good chance, you know, as we traded throughout the day. The nice thing actually for soybeans is that when we were trading lower, we kind of started consolidating. We kind of found a little bit of a bottom for the day, and I think that's a good thing. That was not the case for corn. If you look at the chart here, this is a daily chart, and you'll notice for the last couple weeks we've been selling off hard, and just for a couple of days here we've kind of been consolidating right around that 460 level. We were just a narrow range, a little bit of consolidation. Well, today, right around the close, we started trading lower. We pushed through those lows in the last 4 trading sessions, and we closed out kind of on the daily lows. And to me, that just shows a lot of weakness. I think that foreshadows that if we even meet analyst expectations, there's a very good chance that we could continue to bleed lower here in the corn market. I'd just say relative weakness in the complex.
Yeah, certainly. Let's take a look here quickly at those analyst expectations for Monday's big USDA report. Certainly there's a lot of moving parts as we look at the production side of the equation, but really as it pertains to price here, the big thing to look at is ending stocks. And this table here details what the trade is expecting to be released on Monday from the USDA. As you can see here, the first column is what the USDA projected for new crop ending stocks in their July report. And in the middle column here, you can see what on average the trade's looking for on Monday. As you can see here, it's a different story for corn and beans entirely. On average, the trade is looking for a slight increase to U.S. ending stocks of corn on Monday. And beans, though, a very different story. As I said, expecting a 30 million bushel revision lower in 2013-14 ending stocks. 30 million bushel is quite sizable to soybeans right now. That would represent about 10% of the projected ending stocks in July. So that's certainly not a number to be taken lightly. And I think that that's been reflected a little bit in the action this week. Certainly we saw it on Thursday. Not a lot in today's action. But if we do see a downgrade to that extent, I think that would support soybean futures. And same with corn, as you had mentioned, Cody. I think if we see an ending stock number come in, you know, 1,971,000,000 that the trade's expecting, I think that would continue to weigh on things here moving forward.
Yeah, and one of the other things too is that, you know, we continue to have good weather, and I think that's also going to just continue to weigh on the corn-soybean complex. The one thing that I think the bulls might be able to hold on to here is the significant threat for frost freeze damage when it comes to yield. I know that this year, you know, we've gotten the crop in a lot later. There is a lot more, I guess a lot more of our crop is going to be exposed to a potential early freeze. And as you know, this summer it hasn't been particularly hot. You know, it's been a cooler summer. So there is a significant chance, I think, that we do get an early freeze and that we do get yield damage. But that's going to be hard to price into this market, especially as we continue to see good development weather in the grain filling period.
Yeah, absolutely. Well, I guess bottom line is that we're going to have to wait and see what the USDA comes out with on Monday. That's really going to dictate price here for the next several weeks, certainly until that frost freeze threat is more adequately priced into the market. If you guys want live quotes for that report coming out at 11 a.m. Central Time on Monday, visit us over at grainhedge.com. You can get live quotes, get the charting capability that you see here on GrainTV. No obligations with that trial, so visit us over there at grainhedge.com or give us a call here at the office, 877-472-4607. One last thing to note here, Cody. I know we looked into the cash market a little bit as far as what the changes were that we saw this week. What did we see change, and ultimately, what does that mean? What should producers be paying attention to?
Well, you know, I think one thing is it's great to see corn and soybean basis moving higher here. For on average across the U.S., we saw corn up 9 cents. We saw soybeans up 7 cents. The real strength for corn is the ethanol facilities, and we touched on this a little bit on Wednesday. But the real strength is ethanol facilities. Their margins right now are about as good as they've been in a very long time. I think December 2011 is the last time they were at this lofty of a level. And we're seeing it in the cash market. We're seeing ethanol facilities on average up 16 cents, and some facilities in the western part of the grain belt up as much as 30 cents. So that's very positive to see.
Right.
Now, of course, the last couple of weeks we watched, all basis across the U.S. really collapse. But what we're seeing here is relative strength out of the ethanol facilities. And what that means to producers is if you have any grain to sell, keep an eye on those ethanol facilities. Look outside your typical marketing region because there may be some trucking opportunities out there for you.
Yeah, absolutely. If you need help finding those best cash markets within 200 miles of your farm, give us a call here at grainhedge.com. In general, though, Cody, I think that kind of wraps up what we saw here in the week for the grain complex. Everyone out there, have a great weekend. We'll see you back here on Monday for the USDA report.